Hey, what's up, guys? Sam here, and we're going to be doing our weekly market review for the week ending in November 28th, 2025. So another week is in the books. We'll start here with the indexes. We're going to cover everything that we usually cover, and I'm going to talk a little bit fast because I am jonesing for some brunch, and I don't want to miss the brunch hour here. So been a pretty big week in the indexes. It is low volume, so it is also a holiday week, low volume, all that good stuff. I was going to title the video Low Volume Favors Bulls, and it absolutely does. So actually, let's take a quick detour here. Before we dive into the indexes where we usually start, we will go to my weekend notes that I give to the folks in the main room at Simpler. We'll review those real quick. We'll see if there's any adjustments that I would have to make going into next week, and then we'll come back and cover the indexes. Towards the end of the video, I'm going to give you probably about 5 things that I'm looking at next week, from some stocks that I think have pretty good setups going into next week, and we'll go from there. So let's start with the notes here. I do these every weekend, and then or most weekends, and then I try to share them with the folks in the the Simpler room. The notes up here, these are just random thoughts, and then of course the game plan is actually kind of what I plan to put into action that week. So in terms of the notes here, lots of things were showing up from healthcare. Not a big surprise there, considering that healthcare is one of the strongest sectors. Like we talked about, Europe was on a precipice of a larger pullback. Again, we can kind of skip these because these are just kind of random thoughts that I have. Breath was still notably bad. That actually has been fixed considerably. I'm going to show you a candle, one single candle that shows you how much that has been fixed, which is breath being notably bad. The positives for the week were that sentiment was terrible. Positive seasonality kicked in last Monday. Positioning had flipped to be bearish, not bullish, and many key stocks were oversold. Putting all the pieces together in the game plan, coming into the week, this is how I was looking to trade things, which was bulls will usually fight very strongly in this last week to save the monthly candle from being a full bearish engulfing candle. So that was the mission for the bulls this week, was to save the monthly candle from being full bearish engulfing. I would like to see a strong bounce to resistance this week. My bias based on everything is to still be short into Fed, which is in December 10th, I believe, ideally from a good RR position. So my thought process coming into the week was, we're trading down. I wanted to see us bounce big, give me a sell signal against a resistance zone, and then I would look to get short that signal into December 10th, which is Fed. The first part of that has happened, right? We got the strong bounce, and we've actually exceeded most resistance levels other than 67.40 on SPX. That's the one that we're kind of toying around with right now with a couple minutes left to go for the market close. And so the one part of this story that did not take place was I did not get a single sell signal on an hourly chart on SPX this week at all. Right? There's been actually almost nothing but up, basically, so there's not going to be a sell signal. So this idea has to be either A, kind of punted to next week, or B, changed. I'm not willing to change the idea quite just yet because of the dynamics around this week being very low volume. Again, low volume favors bulls, low volume favors bulls, but I basically have to wait until next week to get the next signal. So let's go over here to the indexes. We'll kind of blast through these. So SPY, big weekly candle, right? Of course, the mission was to save the monthly candle in my estimation. When I did the notes this weekend, I'm like, I know bulls, and they're not going to stand idly by and let that monthly candle be a mess. So this weekly candle goes a long way to fixing it. Obviously, you've had basically 5 days straight up. And the question is, has anything really changed here? And it actually has. From last week to this week, you did get bull slingshot down here, pretty much like right here somewhere. You got the bull slingshot signal. This is positively crossed, but these little mini crosses without any space don't really mean anything. You want to see space between them. You see how it's positively crossed here, but it says no trend. When it says no trend, you just you just look lower, and that becomes your primary signal, and that is a bullish signal. The problem is, and if I may call it a problem, it's a slight problem, is that when this is no trend, if this at any point gives me a down arrow, then that makes that the primary signal, right? So without a signal from here, then I rely just on the arrows up and down. And if you're bullish, this is actually a great signal for you. Ideally, if you're bullish, you want to see this line continue to climb, and that would give you a little bit more reason to be even more bullish. There is a 2-day squeeze also setting up on the SPY, and that one is max bull with a slingshot squeeze. So the onus is definitely on bears at this point to prove that they have something, because this week they've lost almost everything that they had. Let's go to the Qs, and then we'll spend a little bit more time than usual on the IWM, just because I have to show you that monthly candle. So here on the Qs, same exact thing, right? There's absolutely no difference here, other than there's a little bit of a down thrust arrow here, but by and large, this is still leans bullish for now. Big weekly candle, of course, kind of an engulfing candle from last week. Let's look at the monthly candle here on the Qs real quick. So the goal was to save the monthly candle from being a bearish engulfing candle, in my opinion. And at least for now, it is no longer a bearish engulfing candle. You can see the giant wick there at the bottom. And it is holding the midpoint of the body of the last month's candle, which is roughly around 613. So hyper impressive. I mean, when I thought that they were going to try to fix this, I thought that they would maybe fix it to about 601, 603, you know, in a really kind of wild way to look at it, maybe 613. And here they are trading 618. So very impressive. Let's go to the IWM. So this is probably the most impressive one by far, just because when you have dynamics like this week, where it's basically, in my estimation, this week was just a great reason to squeeze shorts, squeeze anyone who got short last week, you know, squeeze anyone back into the market that might have gotten stopped out on those hyper stocks that got recently smashed. And you're really seeing it here in the IWM. I mean, this is just a phenomenal recovery, a big recovery. I mean, from 230 to about 248 in a straight line. Big short squeeze, big patching of the internals. One of the problems that the market had that it just could not shake was bad breadth, bad participation, and the IWM is a big culprit of that, and that has been mostly patched for now. You have to see this monthly candle though on IWM. It is the ultimate reminder that bull markets are bull markets until they are no longer bull markets. Look at this candle here. It was trading way down here just a week ago, about to engulf 2 months worth of work, and instead it looks like it wants to close and make a higher close than the last month, that higher close than the last month, 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 higher close than the last month. Just, I cannot speak enough words about how impressive this is. Now, is that a good looking candle? This would be a great looking candle if it happened at the bottom of a down move, kind of like that. You know, it looks like a big fat hammer candle. Getting the hammer candle up here is not usually great, but it's way better than the alternative, right? So that's actually hyper impressive. And with IWM trading above 245, which is the breakout zone, they've reestablished a nice foothold on the market here, back above 245 on IWM. So let's go to the HYG. Actually, before we go to HYG, let's finish off the conversation with breadth here. We'll look at SPX A50R, which is the number of stocks above their 50-day. When we last looked at this was in the neighborhood of 30%, meaning that only 30% of the S&P stocks were trading above their 50-day moving average, with the index, you know, basically being very close to all-time highs. Big divergence, not something you want to see if you're bullish. And this week, you basically went from 30% all the way up to about 60%. So just a gigantic week here in terms of breadth and participation, and it starts to fix a lot of the problems. That was a big one. That was like the persistent problem that the market had. Was it was all tech, it was all Mag 7, very poor participation from other parts of the market, and then this week they just went nuts and squeezed everyone, hiding almost anywhere in the IWM. So if we look at HYG here, not really a lot has changed, although the daily chart has now shifted more bullish. So I would say that I would agree with what the indicator is telling us here, which is if we look at the scores, it says neutral up, and the weekly is also neutral up. Both of these are favorable to bulls. It's not as favorable as it has been before, but it is more favorable to bulls than not. Therefore, I would go ahead and trust that signal. Let's go to the VIX signal next. The VIX signal is actually getting kind of funky because it's doing something that it did not do last time that I was referencing the signal. There was a comment on the YouTube on the video last week saying that why am I looking at doing TA on VIX because it's a mean reverting product. I completely understand that, and if I were to be telling you that I'm looking for trend in the VIX, I think that would be a silly thing to say. But I'm not really doing TA on it. What I'm really doing is just looking at the squeeze histogram, which can be universally used, right? It doesn't matter if it's mean reverting or not. The squeeze histogram, in my opinion, will work. And I was looking to compare moments in time, very similar moments in time, like here and here. The one thing that's kind of giving me a little bit of a rub now is that up back here, it was a sequential move up. And here, it was 3 bars up, and then you actually get the little bar down this week, which did not happen even during this move down last time. So this introduces a complication into the equation, right? Now, the adjustment that I'm making is actually no adjustment at all. It's kind of funny, right? The adjustment I'm making is no adjustment at all. This week, I was trading very short term, lots of scalping, lots of 5-minute charts, even some 1-minute charts. And based on what I'm seeing going into next week, I will continue to do that. There is a bullish bias now to things, mostly because the internals have been fixed. The VIX signal has that kink in it that I just showed you. You have bull slingshot on a lot of the indexes, the daily charts. You have the IWM above 245, which is critical. So a lot of stuff has been fixed, and therefore the day trading would skew more bullish. But at least for myself, I don't see things as totally settled yet, enough for me to justify swing trades. And just because swing trades are so arbitrarily defined, what I mean by a swing trade is a trade that I can be in for longer than 20 days. Right? Your definition may vary. That's my definition of a swing trade, right? Just 20 days. Can I be in the trade for 20 days and not have it do this? Right? Because the last thing I want is to start a trade here. 20 days later, I've taken the roller coaster ride only to arrive back where I started. That's a waste of time, right? Whereas if you're looking for day trades, you can ride the roller coaster peaks and troughs a lot more reliably. So let's look over here very quick. Actually, I was going to show you the sectors, but I'm going to pass on that. I'm going to show you some things that I saw setting up here. So we'll end the video with some things that we're setting up. Now, a lot of this stuff may look like it's moved, but I actually think there might be a little bit more room to go. And things like Avgo here, I think, are really setting up for their earnings report. I don't even think it's about their earnings. It's about what the market perceives to be their future path. And I think the market's going to be extremely favorable to them. So any pullback here, at this point, like a 1 penny pullback would do. Any pullback here in Avgo, I think, should be bought. Last week, I told you that my favorite big stock this week was Apple. Maybe not my favorite, but a better way to say it, it was the most aligned and cleanest looking big stock that I saw. And it had a pretty decent week, I suppose. The setup here is actually still intact. So if you didn't play it at all this week, I still think that there's going to be time and room to do that. I would just personally want to see a deeper pullback than this. This is just not enough for me to justify buying it. I'm deciding that based on the distance from price to the 21, which is the top of the cloud. This is a little bit big for me. I would like to see a more narrow distance, and then I can get in and we can take it to the upside there. but I still like that one. In the room, I'm trying to buy some cat, but cat refuses to pull back, as does anything this week, which is fine. That's expected to some degree. But cat here, very clean setup. You can see what I'm trying to do with it, right? It's basically catching the flag into the rising cloud with a slingshot squeeze, just classic stuff. Uptrend, try to catch the cloud. I don't have a fill on this. It's not going to fill until about 560 for me, which seems insane, but I think just one bad day could, maybe 1 or 2 bad days could get us there. But very clean signal there on Caterpillar. Goldman, very nice setup here in the Goldman. Probably the best financial I see. So again, similar kind of chart, not as good as what I just showed you, but very serviceable looking slingshot squeeze here. We like that. Tesla, I think, is in play. Back in play. This one's a more complex one, but I would definitely keep it very high on your list because it's doing something that's actually by the book. So maybe we'll close out with this one because this is a good example of how to use the high compression squeeze, or at least maybe not how to use it, but how it can work. Because the only trade that I had on Tesla this week was I had some 420 iron flies. Fortunately, I took them off yesterday or Wednesday, but those did pretty well. But there's a whole thing here on Tesla, and it's actually the most complicated chart we're going to review, although the score is actually pretty good. So with Tesla, it has to stay above 415 in my opinion, because that was a previous major high. That major high comes from back here. So we'll spend a little bit of time on this one because it's an interesting chart, if nothing else. That's your previous all-time high. You draw a line across the chart. The next time that it went above that, you see how much it went above, and then once it failed back below 415, it just absolutely crashed. They kind of try to pull that same trick again, right? You see the little pop above that 415, pop above that 415. You had the fake breakdown in this case, and now you're back above 415, and you're back above the psychological level of 420, which is important on Tesla. So now that we understand that 415 to 420 is the zone of gold, you like the way I drew that one in, very nice. It's the zone of gold. Then what's going on here in the 2-day? Well, the 2-day had a very nice uptrend. It has a high compression squeeze. High compression squeezes like to go counter trend, or at least the bad ones will just go counter trend and break short. The good ones will actually do something like this, and both of them are kind of naughty behaviors, but this is how they are. A high compression squeeze in an uptrend, you break short, and if it's any good, it catches inside cloud and then rips through the top of the range here, which would be about 470, right? So this one actually may be, assuming you have a decent market, which for now I think is closer to the assumption than not, although not overly clear at the moment. But assuming you have a decent market, this has the potential to be exactly by the book high compression squeeze. You have an uptrend, high compression squeeze, that causes it to break counter trend into support, catch support, go back above the previous support level. Now should be resistance 415. Now the polarities flip. Now it's support again. And then from there, you now have slingshotted the signal, meaning it was going to go up, it goes down, and then it rips up the other way like that. With bull slingshot arrows in play, slingshot squeeze, and a very serviceable score above 415. I'll say this, as long as Tesla holds 415 on a weekly close, I would be looking for a breakout here. If it breaks 415 on a weekly close, then the entire idea we just covered goes right into the bin. But above 415, I like Tesla quite a bit. If I can get it at 415 on a pullback, I absolutely would take it with a tight stop. All right, guys. Well, that's my time. It is a shortened holiday week, so I got to get the video out a little bit earlier. But hopefully you enjoyed. Leave us a like. Leave us a comment. And next week should be interesting, right? We'll go back to full-time trading week, and after that will be Fed, and then the end of the year. So we'll see if we get the green light for the run, or if there's coal in the stocking. But regardless, try to use volatility to your advantage as a trader. When you hear volatility, it's just the synonym for opportunity. Catch you next time, guys. Cheers.